All right, well, good evening, everyone. Welcome to tonight's webinar on day trading and what you need to do to be successful in day trading, whether you want to do it full-time as a career, perhaps you want to do it part-time, a couple of days a week, or maybe a couple of hours in the morning, for example. And some of you may just have an interest in becoming better investors, and in that regard, this presentation will be useful as well, because a lot of the concepts that we apply in day trading also transfer to longer term styles of trading. All right, so the first screen that you see up here is a stock that was a great day trader earlier this week. I think it was Tuesday that this one came up. And this is an example we'll go through tonight. We're going to talk about the economics of it and that sort of thing. But just as a matter of introduction, this is a 1 minute chart. You can see up there it says 1 min. And it's a stock that is breaking out through resistance on the 1 minute chart right there at the start of the day. That was at a price of, I don't know, about $5.80. And before the end of the day, it had gone up to about $14. And that's obviously a huge move. It's, more than a double, almost a triple, but maybe 250% in a single day. You don't get those every day, but they do occur more than you might imagine. And as a day trader, these are the stocks we love. And I've got a methodology to find these things very early. I've got rules and different strategies where we would either buy there or there, different here. So there's different strategies I'll talk a little bit about tonight to get into these types of trades. And, you find a few of these a week and a few maybe not such strong performing stocks a week, and you can make quite a nice career out of trading. And what I want to do tonight is introduce you to what we do and give you a little bit of insight into how to do it yourself and what's important and how to be successful. All right, so that's what we're aiming to do. So let's begin with just a itinerary for this evening. I'm going to describe what day trading is. I'll tell you a little bit of my story, how I came to be a day trader. I'll talk about my approach to trading the market. It's not the same as everyone. In fact, it's quite unique. And I use tools and things that aren't really used by most people, and that gives me an edge. So I'm going to show you some of those things and tell you a little bit more about how you can use the same tools and techniques and strategies that I use. We're going to talk quite a bit about how I measure performance, because we're going to talk about the income potential for trading as well and go through a few examples and just go through, how much money would be required to make a certain amount of profit. We'll go through a few examples, but you need to understand a little bit different way of measuring performance. It's not simply about, how many dollars did you make or what percentage return did you make. We measure performance in a little bit different way. So I'll talk about that. Walk you through my trading day, what you need to do to succeed, what will help you succeed, the things that you can bring, the things that I can do to help you. I can teach people, I teach people my approach, and I can teach you my approach. I don't teach a lot of people every year, maybe 100 people a year. And I'll be doing another round of that in May. And I'll talk a little bit about how you can participate in that education for those of you that have an interest in, taking this seriously, whether it's full-time or part-time. Okay, so let's get right into it and just talk about what is day trading. So in my definition, it's entering and exiting positions within a trading day. So buying after the market opens at 9:30 Eastern, and exiting before the market closes, which is at 4 p.m. Eastern. We could hold a stock for 5 hours. We could hold a stock for 5 minutes. Those are all considered day trades. But one of the important things is that with day trading, you are in cash overnight. So we're not sitting in these things overnight, and there's risk in holding overnight. A lot of people think of day trading as a risky way to approach the market, but in many ways, it can be much less risky than holding stocks long term. In the last few weeks, the market has sold off quite significantly overall, day after day after day, until today it kind of bounced back. And so those long-term positions could be down quite substantially. But as day traders, we're not holding those longer term positions. We're focused in on those few stocks that are trading well, trading abnormally, and then we're in and out within the day. And so, on Tuesday, the overall market was down quite substantially, but we had a few stocks that went up quite substantially. And that example that I showed at the top of a stock that broke out and ran for 250% gain on a day when the market was down. And just about every day, there are stocks that make strong moves to the upside, regardless of what the market is doing. Now, when the market is strong, that's obviously a better situation, but you can make money buying stocks even when the market is moving lower. And again, I'll show you some examples from this week. So ultimately, what we're doing when we day trade is focusing on stocks that are moving abnormally and are actively traded. I do not trade the same stocks every day. Every day is something different. And I think it's very important to approach the market that way. When I started day trading a long, long time ago, I would trade the same stocks every day. I used to trade Dell Computer every day. And it didn't really work all that well because most of the time, most stocks are trading normally. They're not making big price moves. And so to try and trade the same stock every day, usually you're in things that are pretty boring. But every day, there are a handful of stocks. In a weak market, it could be 5 stocks. In a strong market, it could be 25 stocks that are making very strong abnormal moves to the upside. And that's what we want. We want to be able to get into these stocks that are really moving abnormally, stocks that can move up 50% in an hour or even 20% in a day. These are big moves. You can capture a little piece of that with your portfolio, with your capital every day, and do it a few times a day and do it every day, or if you're part-time, a couple of days a week or whatever. You can start to see how you can really succeed. The danger with day trading is that most people don't know what they're doing. And they say, oh, it looks pretty easy. I read a book about it that I got at the bookstore, and that makes me an expert on it. And I'll tell you that day trading, while it is simple, it is not easy. I've been doing it for a long time. I've been trading the market for over 30 years, but day trading for probably 20 years. And it is simple, but it is not easy. And it is very counterintuitive sometimes. And so people that approach the market with common sense, doing things that make sense to normal human beings, do not succeed in the market. In order to beat the market, in order to be a good trader, you have to learn how to do things differently. And that is something that I teach. I've learned all of these lessons the hard way, and I can save people a lot of time and money learning it or figuring it out on their own and losing money trying to figure it out. I lost money for 8 years before I figured it out. And now I can take that learning process and really shorten it for people. We'll talk about that at the end of the day. All right, so this is my day trading setup. This is actually my setup from maybe a year ago. I've added a different screen now, but it's more or less the same. I've got big screens in front of me, lots of real estate, multiple computers. Most people that trade will not have this kind of a setup. As I said, I've been doing this a long time. I've built quite a comprehensive, sophisticated setup, but I'm also running a service where people can watch my analysis screen during the day. That requires an extra computer. I'm talking for a good part of the day, and that requires a lot of tools that allow me to see more than maybe I would need to see when I'm just trading on my own. So, but I want to show you this because it's kind of neat. And basically, this is your storefront. If you were to open a restaurant, you'd rent space, you'd have a kitchen, you'd have everything else. You open up a trading business, you have some computers on a desk. When I travel, and I travel quite a lot, I put a couple laptops and an extra portable screen in a backpack, and I can trade from anywhere in the world. And that's one of the benefits of trading, is you really can do it from anywhere as long as you have a reliable internet connection and power to plug into. It gives you a lot of freedom, a lot of flexibility, and that's one of the things that I love about trading. I've traded, while traveling, while on vacation. I had the joy of living in Maui for 6 or 7 months, right on the beach, trading the market. I could see the ocean. Kapalua Bay was literally 100 feet from my computer. I've traded from Whistler. I lived in Whistler for a while. For those of you that like to ski or mountain bike, you'll know Whistler. So I just want to emphasize that this is, to me, the greatest benefit of being a trader, is that you can do it anywhere and you don't have to do it every day. If I don't feel like it, if I feel like going and playing golf or something, I just don't, because when you're a day trader, you're in cash if you're not trading. And so there's no risk. You just go into cash and go do something. Okay. So how did I get started in that? Well, I went to business school at the University of Calgary, and I sort of got into trading early on. Thought it was really interesting and fun. There were no people teaching day trading. There was a few books on trading the futures market, but there certainly weren't classes. There really wasn't the internet the way it is today when I started trading. So I had to kind of figure it out on my own. I talked about that a little bit on Tuesday, about how I reverse engineered the stock market and figured out ways to find stocks that were likely to move higher. There were a lot of hurdles along the way, mostly in that I developed an approach that was very unique, not something that was a normal way to do things. And that meant that I had to build my own tools. I had to come up with my own techniques and tools and methods to basically give me an edge. In trading, you have to have an edge. You have to have something that separates you from the crowd. And what gives me the edge, there's a few things, but the main thing is that I just have better tools. I can find things quicker. I can watch the entire stock market with my computers and the algorithms that I've written, which I'm going to show you tonight. I'm going to walk you through those a little bit later. And those are tools that I share, again, with a small number of people. I'll explain why I do that later as well. Why is trading a great occupation? It's flexible. You can, like I said, do it from anywhere. You can do it anytime you want. It's fun. I love it. To me, it's like a video game. It gives you a lot of freedom, and there's real financial benefits. It's not unreasonable to make $1 million a year trading the market. You can even make more than that. My best month was probably $250,000, $300,000 for the month. And again, you do that in your home, in whatever you like to wear around the house. You don't have to get dressed up to work. You don't have to commute. And if you don't feel like doing it one day, you just don't. That's some of the great benefits of it. But it is quite addictive, I will say. I have a hard time not looking at the market when I'm on vacation, because I do enjoy it. I like to see what's going on. So what is my approach? So I am a strategy-based trader. That means I don't trade on gut feel. I trade on rules that I have tested over a large number of trades. I've written algorithms that a computer applies to identify trades. I'm not a fully algorithmic trader. I let the computer identify the opportunities, but then I evaluate them myself and execute the trades for the most part. It's mostly automated, but not entirely automated. I still make the final decision on the trade. My goal in developing my strategies is to take as much human judgment and emotion out of the equation, because we humans are emotional and we do stupid things just simply because of our emotion. So my goal is to take as much of that out as possible. I make trading decisions based on rules, not emotion, not gut feel. I have guidelines or rules or things, and I have, a checklist of all these different strategies. The checklist is in my head. When I teach people, I teach them to write down that checklist, to go through it methodically. With practice, however, you don't have to think much anymore. It's kind of like, if you're an athlete, let's say you're a hockey player or a golfer, you have this sort of mental checklist of all the things that you've been learning. But when you're good at it, you don't think anymore. It's just instinct. And that's the only thing that separates the person who's being coached and taught the skills and the pro who's doing it with instinct is just practice and experience. And you have to be coached. You have to be told how to do something so you do it right. And then you just have to have repetition so you do it quickly and effectively. So those algorithms, I started trading algorithmically probably 5 years ago, maybe 6 years ago. I started that when I was living in Hawaii, which was 2016. So yeah, about 6 years ago, I started developing a much more computerized approach. And I did that a little bit out of necessity. The stock market, you're competing against every other trader, and you need an edge. And the market was getting faster; it was getting more competitive, and so I had to have that edge. And so I developed tools that the average person probably doesn't have, and that gives me an advantage. And I'm always refining those tools, always refining those processes. But for the first 15 years or so, it was more building a watch list and just watching them for chart patterns. Chart patterns are still very important, but identifying the stocks, I've now made it a much more automated algorithmic process. Again, I'll show you that tonight. So here's an example of an algorithm at work. You can see here there's some little pink dots on this chart. There's a bunch of them here. And that pink dot is representing an indicator I have called an action candle. And an action candle is integral to a few of my strategies. The day trader strategy that it's most important for is called the day trader, the Stockscores day trader strategy. But we also have a swing trading strategy that uses the action candle as well. Now, an action candle is a candle or a bar on a chart. These are little price bars, right? So in 2 minutes, this stock opened down here at, not exactly sure of that price, $2.42 maybe. And 2 minutes later was at $2.45. And so a computer measures that price move and determines whether that price move is statistically significant or not. Okay? So the computer goes through every stock that trades on the US stock market, and it looks for stocks behaving with statistically significant abnormal price movement and abnormal volume. And it tells me, right? I've got a screen, which I'm going to show you in a little minute. It's got a screen that tells me all of the stocks that are making these action candles. And it's important because when stocks start to behave abnormally, when they're kind of quiet, they're doing nothing, and then all of a sudden they come alive and they move up in a way that's not normal, and they trade with volume that is not normal. And you can see that here. You can see the volume traded is much greater than normal. You can see that the price movement is much more than normal. It doesn't take a rocket scientist to figure out that something's going on there, that there's someone that is buying that stock aggressively, a group of investors, traders that are buying that stock aggressively. They probably have some new information that justifies doing so. And as more and more people get that information, the stock goes into an upward move. Well, I don't know anything about any company, but what I know is that I can trust the people that know the most. So there's people acting in the market, they maybe got better information, and I just follow them. But I follow them quickly. I find out about that, 2 minutes after they start buying aggressively. And I can only do that because I've got a computer with these algorithms that are going through all of the US stock market looking for those stocks that are trading abnormally. And when I find one, I jump on board early and enjoy the quick run higher. Now we'll go into the economics of this, but this is an example of a day trader where I'm using an algorithm. Okay. Now it's not enough to just have the algorithm, the action candle there, that's great, but that one is important. This one is not. And so you have to know the difference. Those are things that I teach. Not every action candle is worth buying. In fact, most are not, but some are. And we have a process for evaluating them. And we do that very quickly within a few seconds. We see an action candle, we evaluate, we enter the trade. And, in this case, the stock went from 240 to 276 in about 10 minutes. Most trades aren't that fast. This one moved quite quickly. Most of the time, you have much more time than that. So now we get to talk about how I measure performance, because it really is integral to understanding how to be an effective trader. We have to start with what's called the reward for risk ratio. And let me explain that first. So if we go back to this example, If we are entering the trade here and our risk amount is down here, this represents risk. It's the difference between the entry price and what we call R1, the risk price. We might have our stop way down here. That just means we have a multiple of risk that in this case would be about 3 times the risk level. But we call this risk or minus R1. And as the stock goes up, here it's up R1, here it's up R2. These are multiples of risk. You can see the number there. That's a 3, that's a 4, that's a 5, that's a 6. So this stock went up 6 times its risk amount, 6RR. What that means is if we risked $100 on this trade, then we made $600. If we risked $1,000, then we made $6,000. If we risked $50, then we made $300. And the reason that that's important is because as traders, we've always got a trade-off. And the trade-off has 2 components. It has the expected reward potential versus the risk, and it has the probability of success. So what I do is I track data. I'm going to show you this as well. I've got these data spreadsheets where I track all of the performance for every stock that triggers an action candle, and I've got data going back a few years. And for the day trader strategy, for example, if the indicator is optimized to a certain point, I might have a 70% chance of making 2RR and a 30% chance of losing minus 1RR. Okay, that's not the exact numbers. I just want to keep things simple for this calculation. So from that, I can now calculate the expected value of my strategy. So if I know that if I do this trade 100 times, 70% of the time, I'm going to make an average of 2. So that's 140. 70 times 2 is 140. And 30% of the time, I'm going to lose 1. That's minus 30. So I'm going to net out after 100 trades, I'm going to net out 110 RR. Now, I can say, okay, if I do 110 or if I do 100 trades, I'm going to make 110 RR. If my risk amount is $100, then that means I'm making $10,100 every 100 trades. Okay, so that's the expected value calculation. And how we arrive at these figures comes from accumulating data over a very large sample size of trades. I've got spreadsheets, and I will show you this a little bit tonight. I've got spreadsheets that have 30, 40,000 examples of action candles. Not all of them are valid. We optimize the indicator to come up with the best values for the indicator that give us a nice, strong average RR and expected value. Okay, so that's how I measure performance. And it's really important to understand that now, because as we get into some of the more sophisticated stuff, you'll need to understand what I mean by RR. So again, just to make sure everyone's clear, the RR represents reward for risk. If I risk $100 and I make $500, I have made an RR of 5. Okay? If I risk $100 and I lose $200, I've made an RR of minus 2. All right? I put all that into Excel spreadsheets, and then I can calculate the averages over a large number of trades. So the idea behind being a successful trader is to balance the success rate with the profit that you make versus the loss that you endure. Okay, we're always going to have some losers. I would say at least 3 out of 10 are going to be losers. In a hot market, you might get it better than that, but in a weak market, it can get worse than that. Again, over a broad range of conditions, you will have 65, 70% chance of making money. That's what I'm always striving to do. Okay, so we could, if you think about reward for risk, you could have a strategy that's only right 30% of the time. If 30% of the time it makes 5 RR and 70% of the time it loses minus 0.5 RR, so it has very small losses and big gains, that actually is a profitable strategy. You could also have a strategy that's right 90% of the time. 90% of the time, it could make 1 RR, but 10% of the time, it could lose 20 RR, even though this strategy is right 90% of the time. And in school, you would get an A+. In trading, you're actually losing money because you take the occasional big loss that outweighs all of your correct trades. And there's a lot of people who trade like this. They're actually right a lot, but they take these big losses because they don't know how to manage risk effectively. So what we really want to do is focus on having relatively small losses, big profits, and a success rate that is not 100% the focus, but we want a success rate that works well with our average loss and our average profit. So here's an example from, I think it was from today actually. Yep, I just added this today. So this is a stock that met our optimized values for the day trader strategy. So again, I'm going to show you how we do all this stuff in a little bit. But in this case, the entry signal came at $7.57, 6 minutes into the trading day today. So at 9:36 Eastern, it made an action candle. It was above the previous day's high, which is one of our rules. It was breaking from low volatility, which is one of our rules. There's a few other criteria. So that's an automatic buy on the day trader strategy. It got halted twice. So it was halted here. It was halted here again. But within, this is another fast mover. Again, they don't always move this fast, but this one probably within 20 minutes went from $7.57 up to over $11. So if you took $100 of risk on this trade and you sold, I think a reasonable sell point was right there. So you made 5 times your risk, you made $500. Now I want to be clear, when I say risking $100, that does not mean you're buying $100 of the stock. It means you're buying an amount that gives you $100 of risk. Okay, these are some of the more complex things that I teach in my course material. There's a half-an-hour lesson on risk management and understanding reward for risk. My goal tonight is to give everyone a broad overview. For those who want to know more, who want to do this seriously, that's where my courses come in, because there's 15 to 20 hours of videos and lessons. And I teach every single day of the week in my active live service, which I'll talk about tonight as well. But for now, that's the reward for risk ratio. I think hopefully you all understand. All right, so what does my trading day look like? Well, I do a pre-market assessment and I make a plan for the day. This is not time consuming. I do this 5 minutes before the market opens. So 5 minutes before the market opens, I assess in the pre-market where the index, the Russell 2000 index, is going to open. I look at the S&P 500 a little bit as well. And I have a scoring model called market factor. So for example, today, the market factor was a 2 out of 3. The market was in a downward trend coming into today, but we had some strength at the open. We actually opened above the trend line and we opened above yesterday's close. And so that gave it a 2 out of 3, which meant that my day trader strategy was one worth doing at the open for the optimized. Well, for any of the signals, but you had to have the right signal. Yesterday was a 0 out of 3, which meant we were much more cautious. All right, now I've got a number of strategies I do through the day. So the day trader strategy we do right from the market open, but we don't do it aggressively every day. Some days we don't do it at all if the market factor is weak, or if we're doing it at all, we're doing it very selectively. Other days we're much more easygoing about that strategy if the overall market is helping us. And so that's why we do that pre-market assessment to figure out what the overall market is likely to do today. Based on the market open today, my analysis was there was a good chance that the market was going to move up through the day. And it did that. It pulled back a little bit at the start of the day, which I actually expected, and then it bounced and it rallied nicely into the close, and that made today a decent trading day. It wasn't a great day, but it was a decent day. Now then we have a strategy called the intraday pullback, which we do throughout the day, but we start that at about 10 o'clock Eastern. We have a superhero strategy, which we do throughout the day, again, starting at about 10 o'clock Eastern. Most of the signals for these two strategies come in the first 2 hours of the day. Some will come later, but again, for someone that maybe wanted to trade part-time, you could trade even the first hour and find a number of good trades in the first hour and then knock it off for the day. Now, you're going to leave some money on the table because there are opportunities that come later, but ideally you'll catch a few in the opening part of the day. We're working on a new strategy called a hit and run, which we do mostly in the first half an hour. I'm working on the rules for that. I'm working on that rules development with my students in Active Live who are watching and listening to my daily webinar that I do through market hours every day. It's a great learning tool. I'll talk about that more tonight later. And then we do the simple swing strategy throughout the day. It gives signals every 13 minutes. And most of the signals we ignore, but some of them are good. And depends a lot on market conditions. In the last few weeks, there have been very few swing trade setups because the market hasn't been good. But a year and a half ago, we were doing 5 of these a day because the market was really good for that strategy. So the reason I have multiple strategies is because market conditions are always changing and we need to have something to pull money out of the market on a regular basis. Again, our goal is to minimize human judgment. We do as much as we can with algorithms, but still there is a skill that I have to teach people, and it takes time to learn that skill, but I hold your hand through that process if you want to be a day trader. We've got a service every day. I talk at the opening of the day. I talk at the end of the day. We do some live training throughout the day during the month, and it's just a great way to learn. All right, so here's another example, and this stock actually shows a few of these strategies. It had the day trader strategy at the open. It had an intraday pullback right here, another one right here. These are breaks of flag patterns. It doesn't have any superheroes. It has almost a superhero there, but that one didn't quite qualify because it was still below resistance. The pattern was good. That's something called an ascending triangle. But this stock is trading abnormal volume. It's in play. It's the kind of stocks that we love to day trade. Notice this stock went up 15 times its risk. So if you bought that opening day trader signal, it went up 15 times risk, which means, risk $100, that made $1,500. That's a really good trade. Anytime you get into double-digit RR, you've got a good trade. Let's talk a little bit about the economics of trading. I'm going to go through an example a little bit more slowly, and we'll actually think about how much capital was required, what was the reward for risk, all of that kind of stuff, okay? So when we talk about economics, we want to think about reward for risk, which we've talked about already tonight. We're going to think about capital required for the trade. We're going to look at the profit, the return on our capital, okay? So let's do that with NUTX, which gave us a signal on Tuesday. And there was actually a number of buy signals on this one. I'm going to actually use kind of the most conservative one, which came much later in the day, which was right here. This was actually a better buy. Well, I don't know if it was better, but it was another buy signal. But we're going to use this one right here. Okay, so let's go through the economics of this. So our buy point was right here. And that's just for the sake of round numbers, $7.75. The risk amount, we use the low of what's called the message candle, and that's at about $7.35. And again, I'm just estimating. So that means the risk of this trade is 40 cents per share. So if we bought one share, our risk would be 40 cents plus commissions and slippage. Okay, but we're not going to buy one share, obviously. So how many shares should we buy? Well, the answer to that question comes down to how much you're willing to lose. And so if you say my risk tolerance is $200, then you're going to take $200 and you're going to divide it by 40 cents, and that's going to tell you you should buy 500 shares. So if my risk tolerance is $200, Then we're going to buy 500 shares. Okay, 500 shares times $7.75 is $3,875. So that's the cost of that trade, $3,875. Now, if you are a day trader and you're closing out your positions before the end of the day, then you can margin trades 3-to-1. Your broker is going to give you the ability to borrow part of that purchase. Okay, so if we're buying at $7.75 and we're buying 500 shares, that's $3,875. You can margin that 3-to-1. So take that number and divide it by 3, and that's going to be your capital required. So in this trade, it's going to be $1,291 plus commissions. So let's round that off to $1,300 of capital required to take $200 worth of risk. Now you could go through the same calculation. If you were willing to risk $2,000, then it's going to take $13,000 of capital. Okay, it's all, it's just arithmetic, right? Okay, so we're going to use $1,300 of capital to take $200 of risk. Now, next slide shows you what this stock did. So the buy point was right there, right? That was at $7.75. If we draw our reward for risk lines, and I'm just going to eyeball them. So that's 1 RR. I'm going to make these green actually. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Again, I'm guessing they're probably not exactly accurate, but this hit 14 RR. Now, a sell signal on this particular trade is ideally right there. That's when it broke down from what we call a parabolic trend. It actually did that here as well, but it wasn't up as enough to really look for that yet. So we've got a parabolic trend breakdown right there. And so that's at 11 RR. So our exit point is going to be at 11 RR. All right. So you should know now what the profit was. If our risk was $200 and we make 11 times risk, then our profit is $2,200, right? Again, this is a very good trade. It's probably the best trade of the week. $2,200. And what's great is it only required $1,300 of capital to do it. Yes, the trade took $3,875 of cash, but your broker will lend you 3-to-1. So they're going to lend you 2/3 of that. So your actual capital required was $1,300 to make $2,200. Now, a few things to know about what's called margin is you typically can't margin stocks less than $3. Some brokers will do it less, but most will not margin stocks under $3. So stocks under $3, you got to put up all the capital. But that's okay because usually those stocks are quite volatile anyway, so they don't take a lot of capital. But anyway, there's the economics on this trade. Okay, now there were other entries. There was another entry there. There was an entry there. There was another entry there. A number of different strategies. I just wanted to focus on one, which was actually not the best one on this stock. Now notice on the sell side, this stock did something called a parabolic trend. So if I draw my upward trend line, drawing it across the bottoms, you can see that it gets steeper and steeper. And when you get a parabolic trend, which means the trend goes from being linear to a curve, and then you break that parabolic trend, that's the bubble bursting, all right? And that is a strong sell signal. And you can see that after that, the stock fell lower. And it almost got down to where this all started right here. So it went from being a $2,200 profit to like maybe a $100 profit. So you have to know a sell methodology as well. And of course, that's another part of what I teach. Here's another example. This stock gave an entry signal on our hit and run strategy, which is a new one right there, and that one lost. Okay, so you're going to lose money there. Let's say you risk $200, you would probably lose $400 there. Okay, so right off the bat on that one, you're down. It then gave a signal on our pullback play strategy right here. There's a message candle there. You can see a little white dot. Again, that's my algorithm at work. And on that particular trade, the entry was there. In this case, it made 1, 2, 3, 4 at the max. You wouldn't get out at the max, you'd get out there. So that was a +2. So now you made $400 there. So overall, on this stock, on this day, it was a break even. Okay. We'll look at some more examples perhaps later on. So what do you need to do, or what do you need to have in order to do this? Actually, I'm just going to pause because I got a couple of questions before I move on. So someone asking, which of your webinars discuss various tax strategies for Canadians? I don't really get into that because I'm not an accountant. I do teach a little bit about that in the course material, but the quick answer is go ask an accountant, because I don't want to tell you something that maybe isn't right. I trade inside a corporation because I'm a professional trader, and that's what makes the most sense. But you really should, I'll help my students with some guidance of where to look and the questions to ask for their situation, because I know a little bit about it, but I'm not a licensed accountant or anything, so I don't get into that. Another question, what is the interest service charge for this leverage? If you close out those positions before the end of the day, there is no interest. You only pay margin interest when you hold positions overnight. So that's one of the nice things about day trading, is you don't pay leverage interest charges on using that margin. The brokers will give that to you for basically for free. I mean, you pay a commission, but the commissions are $5, $10. Now, Paulina, I'll answer your question a little later when we get into the active live null area. Okay. All right. So let's get back to this. What you need is knowledge. So I think everyone should understand a little bit of stock market theory. So that's part of what I teach, but it's like a half an hour lesson on what is stock price based upon, why does stock price change. I'll just teach you the theory of that. That's the stuff you learn in business school. Probably in business school, it took me 6 hours. I'm going to teach it to you in half an hour. Then you have to know how to analyze a chart, how to analyze chart patterns and markets and that sort of thing. That's a big part of what we teach in the course material. And you're going to spend probably maybe 2 to 3 hours on this. Risk management, I can teach that to anyone in an hour, probably less. Money management is kind of part of risk management. Strategy development, I do that for you, but I'll teach you how to do strategy development. That's another hour. And the actual mechanics of doing things, that's another hour. The rules of the strategies, that's, an hour per strategy. Maybe, if you want to learn all the strategies, 3 or 4 hours. So you can see that it's not a lot of time to learn this, but it does require practice, right? I can teach, anyone can read a book on how to play golf. It takes them 8 hours to get through the book, but that doesn't make them a good golfer. You have to practice. You have to have someone who tells you what you're doing wrong. You have to have someone who helps you see what's right. You might videotape your swing. In that regard, my students will email me some of their trades or ask me about their trades in our active live service so that I can give them feedback. I spend the last half an hour of every trading day going through all of the questions from my students on the trades that they found, that they took, that they passed on, just to keep giving them feedback. And that's every trading day, unless I'm traveling or something, but for the most part, it's every trading day of the year. I'm giving that coaching, that advice to build that knowledge. When I started trading, I didn't have anyone to do that for me, and it took me 8 years. I can shorten that dramatically by giving you the coaching, the knowledge, telling you all the things that I did wrong and telling you why you shouldn't do the same thing. And, like just today, someone was wanting to trade a market a certain way. They had an idea that was very commonsensical, but it's totally wrong. And you don't know that it's totally wrong because, if you haven't been trading for a long time, you don't get that some things that make common sense actually do not work in the market. A lot of times you want to do the opposite of common sense. I learned that the hard way, and I can help you learn that as well. course, you also need strategies. And so I've developed, 5-day trading, 4 or 5 day trading strategies, a couple swing trading strategies, 4 or 5 investing strategies. And I've done that very methodically using data. Some of these strategies have taken me years to develop and refine, and I share those with my students. With the strategy, we have the rules for when to enter, when to exit, how to size our positions, manage risk. They're well tested. They're based on good theory, financial theory. You don't really need to understand the theory, but I'll tell you what it is when I teach that strategy. But again, all you really need to understand are what are all the things to think about when you're evaluating the stock to determine whether it's a good trade to take or not, how to size your position so that you don't take too much risk, where is the exit signal, and then the process. And that's a big part of strategy development and application, is you have to also have a process to find these things in a time-effective way. And so that's, part of what I teach as well. So, okay, so the power of statistics. So I told you that I have this big spreadsheet. I just grabbed an image of that spreadsheet today, and I build a new spreadsheet every 6 months or so, just because the data gets so massive. So right now, this spreadsheet on the long tab, so this is our buy tab, has got 29,000 lines of data. And each line is a stock that made an action candle. So this is from today. MRO, Marathon Oil, made an action candle at 3:08 this afternoon. And then we have all these statistics, which we can then use to refine the strategy. And so there's something here called price significance, gap significance, volume significance, candle percent, action ticks, drawdown, max RR, number of shares in the position. RRI is reward for risk down to inflection, capital required for the trade for a certain amount of risk. So these things are all in this spreadsheet. And then what we can do is refine the settings of those indicators. So here you can see all the indicators, and we can refine them to come up with an optimized value for those indicators that gives us the highest average RR over a large number of trades. So when I teach you a strategy, the reason I'm showing you this is when I teach the rules for the strategy, it's not based on gut feel, it's based on data. It comes from applying those strategy rules and those indicators and those algorithms to tens of thousands of trade examples. And in a given day, we might only, there might be 300 signals, and of that, we might only like 5 because of the values of the indicator and the chart pattern. But that's the process, is to refine it down to the very best entry signals. And then there's a strategy for the exit, and there's a process to put that strategy to work. But what I want you to take away from this is not all the detail, because it can be a little overwhelming. It actually makes a lot of sense once you've spent a little bit of time learning my stuff. But what I want you to take away from this is that it's very sophisticated. Most people don't do this stuff. Most people don't have 5 years of spreadsheets with 30,000 trades in each one that came to define the rules for the strategy. I teach you how to do this. Most people don't do it. Maybe 10% of my students will actually do stuff like this as well. They may be good with Excel. I've got a few students who are really good at data analysis, actually better than me, far better than me. And so they do some really in-depth analysis, but I show them how to collect data and how to think about rules to take out bias. Because when you're doing strategy development, one of the big problems is bias, and I have to help you to learn how to take that out of your process. And I do teach that. It's one of the modules in the course materials. All right, so what do you need? You also need tools. So to research the market, I use a tool called TradeStation. So it looks like this. And this has nothing to do with me. It's an American software company that makes software for analyzing markets and doing analysis. But what's good about this software is that it has the ability to make my own indicators. So when I talk about creating algorithms and developing my own indicators, I've done that inside TradeStation. And I share a lot of those indicators with my students. So you can watch my active live service where you watch my screen, watch my computer doing the analysis all day long. It's all automated. But you can also run TradeStation yourself and use my action candle indicator or my message candle indicator. Most people use my active live service. I'll show that in a moment. Some people do both, and some people just do it on their own with TradeStation and my indicators. It's up to you. I don't really care how you do it, as long as it works for you. But this is TradeStation. I'm not going to talk a little bit or too much about that tonight, but this I teach this as well in the course. I've got a couple of videos on how we set this up, how we use it, how we apply those indicators, that sort of thing. You need an order entry tool. So that's your broker. Depending on where you are in the world, you might find that if you live in the US, you might want to use TradeStation as your broker. Here in Canada, I use interactive brokers. Other possibilities are TD Thinkorswim, Questrade, Qtrade, Disnat. Disnat's maybe not so good anymore. They changed their platform, but could be okay. I just haven't looked at it for a few years after they changed their platform. But again, there's a lot of them out there, and part of what I do for my students is kind of help them to figure out what broker is right for them. There's not really a best broker. There's a broker that's right for your situation. And it really depends on how much you're going to trade, how much capital you have. There's a lot of variables. So I can help you sort of define which broker is right for you with a few questions that we can work on. And again, that's a service I provide to my students. I don't have the time to do it for everyone, but I teach a small number of people. I can do it for that small number of people. You also want to do post-trade analytics. And so I showed you how I use Excel a little bit. It's also a good idea to keep a trading journal. You can use simply something like Microsoft Word to keep a journal, or PowerPoint or something. There are websites. There's a website, I think it's called TraderView. I always forget this, but I think it's TraderView. And it is a website to keep track of all of your trades. And it gives you statistics and analysis on your trades as well. I don't use it myself, but a number of my students use it. And then we have a great tool called Active Trader Live, where again, you are watching my trading screen. I'm going to show you that in just a minute. Now you also need process. It's not enough to have the rules. You have to have a step-by-step plan for implementing the rules. It has to be mechanical. It has to be efficient. It has to take emotion out of the equation. And the more you can do that, the better. A big part of what I teach is process. And when I'm doing my active live service, I actually call it out for the first half an hour of the day. I call out what I'm doing as I do it. So I'm looking at this symbol, I'm evaluating, I just call out my steps. I do that every single day. And the reason is to just show the repetition, show the process. Because again, trading is simple, but it's not easy. It's like golf is simple, but it's not easy. You have to practice and repetition. And if you have a coach that can give you that repetition every day, you're just going to learn a lot quicker. It's not going to take you 8 years. It might take you 6 months to become a professional trader, if that's your goal. Okay? So the process for my day trader strategy is I start by defining the market factor, and then I scan the market constantly throughout the day for action candles. When there is an action candle, I assess the stock for the satisfaction of the other rules, which is mostly a visual inspection of the chart. If it satisfies those rules, I enter the trade, and then I monitor those stocks that I'm in for an exit signal. I also keep an eye on whether the market factor changes. If the market's going up and then all of a sudden starts to go down a lot, I might get more aggressive with my exit signal. Active Trader Live automates this process for you. I'm going to show you that in a moment. All right, the next thing you need is capital. So how much capital do you need? I always get asked this question. It really depends on what your risk tolerance is. If your risk tolerance is $50 a trade, then you shouldn't need more than $10,000 of capital. If you have $5,000 of capital, then you're going to have a lower risk tolerance. If you have $1 million of capital, then you can have a much higher risk tolerance. However, the number one goal that we have is capital preservation. So I don't care if you have $10 million to trade with. I want to see you start with $0 of risk. Just learn. There's no rush. The stock market's here forever. So what you need to start with is learning how to trade and practicing and listening to what I tell you, asking me questions. And then, okay, maybe you start with $25 of risk and you have some success at that, and then you can increase it to $50 of risk. And you have some success at that, and you can increase to $100 of risk. It's a step-by-step process to increase your risk with success. And if you're not successful, lower your risk to zero and practice again. Our number one goal is capital preservation. You don't want to lose a bunch of money in the stock market. 95% of people that want to day trade, they fail. Why? They don't know what the heck they're doing. They think it's easy. They read a book that Day Trading for Dummies. It's the most expensive book you'll ever buy. It costs you $40 and ends up costing you tens of thousands of dollars in losses. And I say that I've taught over 1,000 people over the years. And you need to do this process. Step-by-step risk management, slowly build up, build your confidence, build your skill. If you're a hockey player, you don't start at 7 years old in the NHL. You learn how to skate at 3, and you're, okay at 10, and maybe by 18 you're getting drafted into the NHL and you're a pro. Now, it doesn't take nearly that long for trading, but the process is similar. You start slow, you learn, you ask me questions, you get coached, and then you slowly increase your risk. And you can get to the point where you can make $100,000 a month, but you're not going to make $100,000 in your first month. I mean, I have had students do that actually, but only because the market was very hot and it was easy. Okay. So what will help you succeed? As I keep saying, trading is simple, but it's not easy. You need to walk before you run. I can't stress this enough. If you want to learn how to do this, I will teach you, but don't expect to be successful in your first week. It takes time to practice. It takes time to learn how to focus. You have to have some determination. You have to be disciplined. You cannot be a gambler. You have to follow a strategy. Gamblers can make money in a hot market. I saw lots of gamblers make money on the meme stocks of 2 years ago, GameStop and AMC. Yeah, lots of people made money on that, but most of them gave it all back. I've seen money made in every hot market, in cannabis, in mining stocks, gold mining stocks, tech bubble. I've done this for 30 years. There've been lots of bubbles, and there's lots of instances where people make money and they think they know what they're doing. They think they're smart, and then they end up giving it all back. The real test of a good trader, or whether a trader is good, is whether they can make money in a normal market or in a crappy market. That's the test. So I can help you through that process if you want. There's other people that'll help you as well. You can try to figure it out yourself, but I think that you can save yourself a lot of time by finding someone to teach you and show you the ropes. As I said, what I did is I spent 8 years developing my strategies, learning, paid a lot of expensive lessons before I was successful. I started with $3,000. Over the course of maybe 8 years, I turned that into $30,000. And then in 3 months, I turned that $30,000 into $500,000. I started to figure it out, and the market was good. And mostly I got rid of my emotion. I found a good process. I developed my strategies. So I can help you so that this 8 years doesn't take 8 years. Now, part of how we teach, or how I teach, is online. There's online videos, written lessons, assignments, tests. For the theory, that's in the foundation module. For the strategies, that's either in the investor modules for investor strategies, or active trader for the active trader strategies. So this is day trading and swing trading. We haven't really talked about swing trading tonight. Swing trading is holding a stock for 2 days to 2 weeks. Investing or position trading is 2 weeks to maybe a year. not long-term investing, it's still trading, but it's not as active. So that's what I talked about on Tuesday. And if you missed Tuesday's webinar, it is on the Stockscores YouTube channel. Just go to YouTube, Google Stockscores, or search for Stockscores, and you can see that investor lesson. It was Tuesday, April 26th. All right, so I showed the Education Center on Tuesday. I'll quickly show you that again. You go into the Education Center here. You have to be a member to do this. You have to have bought access. And then here you're learning theory in the foundation area. So how to read chart patterns, exit signals, risk management, how to use stop losses, scaling into a position. Someone asked about whether I teach strategy development. There's the module for that. How to create a trading plan. So you see all of that there. And then the investor strategies are here, and the active trader strategies are here. You're not going to do all of them. You're going to focus on one or two of these. But each lesson has the rules written down plus a video that explains it. In the foundation area, which is our theory, there's also an assignment and a multiple choice test, so you can see if you know what you're doing. The investor course gives you access to the foundation and the investor area, does not give you access to the active trader area. It gives you access to the investor market scans on Stockscores. I showed that on Tuesday. You get email support from me, and you pay an annual fee of $300 a year to maintain your access to the Stockscores tools. Tonight we're talking about active trading, so we'll spend a little more time on that. The active trader course gives you access to the foundation as well, to the investor strategies as well, but also the active trader strategies, the investor market scans, the active trader market scans, email support from me, same deal on the Stockscores tools, but you also get my indicators for TradeStation. For those of you that want to use TradeStation, you don't have to, but it is an awesome tool, so I think it's a good thing to learn. I would say probably, I don't know, of my active trader students, probably 30% do this. Probably 90, well, maybe 80% of students, no, probably not 80. I don't know. Most people use Active Live. It's just easier. A lot of people use both. So what is Active Live? So I've got this computer to my left right now, which runs my algorithms in TradeStation all day long, and it's all automated, and it is identifying stocks that are abnormal, that are making action candles, that are breaking pullbacks. All of these different strategies can be computerized. And the computer can generate the signals, because it's really hard to watch 7,000 stocks. You can't do it. But the computer can do it. The computer does a great job of it. And so what I do is I let the computer watch 7,000 and then tell me the 2 or 3 every couple minutes that I need to look at, or the 15 stocks that I need to watch through the day for my pullback strategy or my superhero strategy. So it allows me to focus. Now, I used to not have this automated. I used to have to do this all manually in TradeStation, and it's a lot of time, and at the end of the day, your head is sore because it's a lot of thinking. Now, I started doing this a few years ago. I just automated everything, and so just way easier. It allows me to focus more on the actual trade. I don't do so much hunting. I'm more about finding the trades and executing them now. And that's Active Live. So anyone can watch my screen. Just like we're doing this webinar tonight, you log in every morning before the market opens, and all day long, you're going to watch my analysis screen, which looks like this. Now, to someone that doesn't know what all of this means, this is probably super overwhelming, but it's actually really simple. So if you want to trade the day trader strategy, you watch this screen. If you want to trade the intraday pullbacks or the superhero strategy, you watch either this screen or this screen. Wave strategy, this part. Swing strategy, you focus on this part. What these are all the stocks making signals. So PRTA made a signal at 158. These are the statistics that we also track to determine whether it's a trade worth taking. Okay, so in a typical day, we'll get maybe 200 signals on this screen. Lately, we've been getting 40 or 50 because the market was a little softer, but today it was quite different, quite a bit better again. The best trade of the day was ACHR. It earned 10 RR. I had that on my watch list, this is the stocks to watch list. I had that on my watch list this morning at probably 4 minutes after the open. It didn't make the actual entry signal until a little later on a pullback break. I can't remember actually. Not sure. But these are all the stocks that move big today, and they all come from this screen. And when a new one comes up, like at 3:30, you get this signal, you look at the chart, yes, no, no, move on, yes, buy it. I teach you what to look for. So you don't have to do the work, you just watch this screen. This is the same screen that I watch at my desk. I just broadcast it via webinar so that you can see it as well. Now we do have another option for learning. It's called the mentorship program. It's 14 one-hour online meetings. Our first one starts Saturday, May 14th. And we're going to do it fairly rapidly this time because I like to get this done before the summer. Most people don't want to listen to classes in the summer. So we're going to do 6 weeks from Saturday, May 14th until the end of June, a couple meetings a week. I'm going to walk you through all of the material, hold your hand through all of it. So if you want to learn quickly and you want me to walk you through the material more personally, mentorship is the way to do that. It's limited to 20 students because I give a much more personalized service. There really isn't anything in this class that you will learn that you can't learn on your own. All of the material is the same. The difference is I hold your hand through it. And so you don't have to watch the videos on your own. I mean, you should too, but I actually teach them. So I'll do a class. The first class will be on chart reading basics. And then we'll do a class on risk management. We'll do a class on the intraday pullback strategy. We'll do a class on the day trader strategy. Each class is about an hour long. If they're on a Saturday, they'll usually be at 9 or 10 in the morning Pacific time. But most of the classes are Tuesday and Thursday at 6 o'clock Pacific. If for some reason you can't attend one, maybe you go ballroom dancing on Thursdays, they're all recorded. So you can catch up with the recording, but it is better to attend them live because you can ask me questions live. It's a small group, 20 students. And so, I spend a fair bit of time just answering questions, making sure everyone is up to speed. If you're one of those people who want to be a pro trader, you want to make $5,000 a day trading the market, that's your goal, then this is the way to do it. Because for what it costs, it costs basically the same as 6 months of university, and you're going to know everything you need to know to trade, and I'm going to hold your hand for the months going forward, years going forward, really, to help you learn how to do it. So we're doing some bonus live online training as well in May. That starts Monday, May 9th. So anyone that purchases either the investor course or the active trader course before May 6th will get all of this for free. So this is what investor students get, and this is what active trader students get. So the difference is you get a free month of active live, but you also get the classes. So Monday, May 9th and Tuesday, May 10th, we're going to do theory. I'm going to teach you how the stock market works and just the basic stuff. So if you know nothing about the stock market, great. If you know a little bit, you're going to know a lot more. If you're really experienced already, you're still going to learn something because I guarantee you some of the things I do you won't have read about in a book. Then on Wednesday, Thursday, Friday of that week, we're going to also practice doing market scans for the investor strategies. So this is really focused on the investor strategies and theory. And then for the active live or for the active trader students, you can take a free month of active trader anytime you want. Active trader costs, depends on what we do that month, but anywhere from $195 to $245 a month. And the difference is how much I coach. So on months when I coach more, which is most months, it's $245 a month. Some months, like maybe in the summer, I might go on a trip and there's gonna be less coaching, so then I just lower the price a little bit. All of these classes are gonna be recorded, okay? So if you wanna watch them later, You can watch them 20 times if you want. And they are free if you purchase the Investor or Active Trader course before Friday, May 6th at 11 p.m. So that's the deadline. If you want to take the mentorship, you probably shouldn't wait that long because it sells out every time I've ever taught it, it sells out. So there's only 20 spots for that. I've just opened it up today. 2 people registered today, so there's still lots of spots available, but this is kind of the first time I'm announcing it. If you want to register for the classes, any of them, there's the pricing, first of all. So $2,495 Canadian for the investor course, $34.95 for active trader, $54.95 for mentorship. If you want to go to university in Canada, it's like 10 grand a year, maybe probably more. If you want to go to university at a good school in the US, my daughter got accepted to a New York University in New York for acting. It was $100,000 a year US. So this is like super cheap. And you will learn a trade. You will learn how to trade as long as you put in the work. I can't tell you to watch the video. I mean, I can tell you. I can't force you to watch the videos, to do the lessons, to ask me questions. Only you can do that. I'll teach you everything you need to know. My investor strategies are taught here, $24.95. Active Trader teaches the investor strategies and the active trader strategies for $34.95. You want me to hold your hand through the process and give you a little more one-on-one coaching? It's $54.95. If you took Active Trader 2 years ago and you want to upgrade to mentorship, it's $2,000 to upgrade. If you took the investor course 5 years ago and you want to upgrade to active now, it's $1,250 to upgrade. Okay, now I'll show you how to enroll quickly. You go to the Stockscores website. To enroll for the active trader or investor course, you just go to learn how to trade under trader training. Click on that. And there's more information on this page, and you can purchase it right here. So there's a video there on the active trader course, what's included, and the cost. You just click on order active trader and you can register right online. Investor, it's all there, okay? I'm going to do another webinar on Saturday where I'll talk a little bit more about what's in these courses. So if you want to sort of come to Saturday and you can learn a little bit more about what's in all the classes, we'll do that then. If you want to register for the mentorship, you have to first be registered for Active Trader. So you would do that here first. If you're already an Active Trader student, then you just log in. And then you go to Trader Training, Upcoming Events, and go down to the bottom of the page where you see here Stockscores Active Trader Mentorship Spring 2022. And you just register right here. It'll charge you $2,000 to do that. But you have to already be an Active Trader student. You can do it 2 minutes later. You can sign up for Active Trader and then immediately, well, you have to log out of the website, log back in, and then sign up for the mentorship on this page. I'll talk more about that on Saturday. What I want to do now is just launch a poll to get a sense of whether you would like a follow-up email. The follow-up email will come on Sunday. And as I always say, I don't like to bug people with a bunch of marketing garbage and spam. So if you don't want me to send you an email, then just say no. But otherwise, let me know. I'll leave that up for a moment, and then we can take some questions. Again, I've gone a little over time. My apologies, but I love day trading. It's my passion. I've been doing it for a long time, and I could talk about this for 8 hours if I had to. Question, what is the monthly fee for TradeStation for Canadians? It is $99 US a month for TradeStation. Again, that has nothing to do with me. You pay that to TradeStation. And then you have to subscribe to the exchanges. So if you're a non-professional trader, so unless you're like a pro at a brokerage or something, you're going to pay like $10 a month for exchange fees, so $110 US. I was a student years ago and used TradeStation. Do your students automate TradeStation as well, or do they manually look for trades? Some automate it. There's some software that you can use called Hot Keyboard, which will automate some of it. It's never going to be as sophisticated as Active Live because I use some tools in Active Live that aren't available otherwise. I'm going to take down this poll now. Thanks for answering. Question, if I pay for Active Trader and I'm busy most of the nights, will it still be worth my while watching the recorded videos? Yeah, I mean, The only downside is if you have a question, you have to email me. Whereas, in a webinar, you can type your question, I'll answer you as it happens, and I can show you. If you missed the meeting and you want to ask a question about whatever I was talking about, you just email me, I'll answer you still, and I answer fairly quickly. But it's actually more easier for me if you come to the live class because I don't have to do the email explanation, but I do both. It's fine. Are you speaking to customer when enter or exit position? Not every one, because I don't talk all day. I talk for the opening half an hour and the closing half an hour. And then a few days a month, I do extended sessions. So for example, today I did the first hour and a half. And I will say, okay, here's a signal. This is a 6 out of 10. Here's a signal. It's a 7 out of 10. There's a potential exit signal here. And if you want to still hold it, this is where your stop should be. I try to guide you through that. But I don't want people to just do what I do. I want people to learn how to do what I do. So my goal with Active Live and teaching is to make you autonomous. You still may use my tools, but I want you to, if I die tomorrow, I want you to say, oh, well, that's sad, but I don't really need Tyler anyway, because I've got the tools, I've got the software, I'm good. All right. So if you're looking for someone to tell you what to buy and what to sell as it happens, I mean, I'll do that a little bit, but I don't want you to take my service if that's what you're looking for, because I don't think you're helping yourself. I'm going to teach you how to do it so that you can be independent. Another question, is swing trading the best if I have a regular 9 to 5? Well, swing trading requires a little bit of time at the start of the day or at the end of the trading day. So a lot of my swing traders are able to log in before they go to work, let's say. There is things you can do in the evenings as well, but you're going to be more of a position trader. There's one swing trading strategy you can do in the evenings, but yeah, it's more a matter of, if you're going to swing trade, I think you need to be able to check the market at least half an hour of the day. Can we just buy your software, like without taking the course? No, you have to pay for the course material. I basically look at it as it's an initiation fee. Some may say, well, I know lots about trading, I don't need to take the class. That's fine, but I guarantee you there'll be things that you will learn. And I don't want to have a whole bunch of people using my tools. The reason the prices are what they are is because I don't want to teach 1,000 people a year or have 1,000 people using my tools. It's a small number of people because I use these tools as well. And if too many people use them, they don't work as well, right? Everyone's letting do. So Stockscores Live, that's basically Active Live, so that's available now. You mentioned 8 years to be successful. How did you define that, and what was your P&L? Well, that was where I was able to make a living off of it. So I traded all through university, and I mean, I was probably the only kid in my university that drove a Porsche 911 to school, but I still wasn't, I was living with my parents still while I was in university. So, so that to me is how I could make a living off of the market after 8 years. But I want to emphasize, I didn't have a teacher. I figured it out myself. Yeah, don't expect to take 8 years. It should be much quicker than that. Okay, I think I've got all the questions. If I answer or I miss something, you can always email me. Let me put my email address. That's where you go to register for the course. And again, the deadline for the bonus material is May 6th. That's Friday, next Friday, not tomorrow. We do have another webinar on Saturday, and I encourage you all to join that. Just go to Trader Training, upcoming events. It's this page. Here's the Saturday webinar. Register online. It's free. Starts at 9 a.m. Pacific, 12 p.m. Eastern time. And I'll talk for, it won't be as long as tonight's, maybe 45 minutes on Saturday. And hopefully lots of you will be there. I think we'll end it there. I want to thank you all for joining me tonight. Hopefully we'll see lots of you on Saturday and lots of you the week of May 9th when we start teaching this stuff and getting into it. It's a lot of fun. I love trading, and I think you'll love it as well. So thank you for joining me tonight, and we'll end it there. Thanks, everyone.